To market sense. Now let's talk about those Asian markets where growing optimism that China and the United States will reach a trade deal did begin to lift most Asian equities, especially on Wednesday this morning. Now, while the positive sentiment also provided support to regional currencies against the safer bet, of course, being the dollar. Now, the yuan was among the big gainers following a report that the United States had indeed called on China to stabilize the unit as part of any agreement between the world's top economic powers. So a second good day in the Far East, with the Nikkei in Tokyo rising 0.6% to 21,431 points. The Hang Seng was almost a percent to the good at close of trade, closing out at 28,484, while the Shanghai Composite moved 0.2% to the good, 2,761 points on that front. Now, U.S. stocks gained ground on Tuesday as upbeat results from the likes of Walmart boosted investor sentiment, and high-level United States-China trade talks resumed back in Washington. Now, the Dow Jones Industrial was mostly unmoved at 25,891 points, with the S&P 500 edging up over 0.1%. That's to 2,779 points. The Nasdaq Composite was again taking home some solid gains, rising to 7,486 points, an uptick of 0.2%. That market picture is certainly one that continues to fluctuate, up one day, down another day. If we just take a look at how things are faring thus far, of course, the market picture itself is one that will be keenly watched as the finance minister sets out his budget targets and predictions for the year ahead. What happens to growth? Remember that the previous estimate was for 0.7%. That was set out in October. Does that continue? So we'll continue to see how things fare locally. On the international front, I'm sure a lot more on Brexit, and of course that US-China trade deal will continue to be in focus. Let's unpack that exact number and we'll get into the analysis in just a bit. Around 1% to the good. That's the state of South Africa's JSE All Share thus far today. Yes, a bit of nervous trading ahead of that budget speech by the finance minister, but 14.11 is where the rand stands, and we'll continue to track that, obviously. Let's track all of that and the equity news to have come out. Makwe Masilela from Makwe Fund Managers joining us in studio. Thank you so much for the time, Bab. You know, we could easily start off with that budget speech, but I'm going to choose to start off perhaps with some equity news as well. We've seen a lot of earnings news continue of late, and today continues to be another day, although it probably takes a bit of a back seat though, doesn't it?
By all means, you know, but even though the likes of Tiger Brands, they just indicated that they have not done that badly, and it makes sense if you take out what we call the value-added meat products, that the guy's revenue managed to grow much decent, but all because of better inflation and sales volumes. Yeah. But going forward, the company, they appreciate and acknowledge that the challenge or the environment will continue to be challenging, and it's not surprising given that the SA consumer is struggling.
Their trading update will certainly, which is a 4-month trading update that is, will certainly paint a picture, however, of what things may look like for ShopRite, which has certainly struggled, even though they've tried to diversify things, they've tried to bring down their in-house inflation as well into really single digits more than anything else.
And by all means, Tiger Brands was fortunate because the inflation managed to grow by 2%, but unfortunately, that increase was not as good as compared to the cost increases. Hence, their margins continued to be depressed.
What else would we say, though, however, with regards to the likes of EOH? I mean, that stock has fallen at least 92% if I'm not mistaken, since the news broke out, just with regards to how difficult things have been and that they may have indeed been changing the way the books are done. It's just an element here that any bit of bad news in the market now, you get kicked for it. And now the CEO's leaving.
Exactly, and mainly because those kind of stocks are priced for perfection. So any slight mistake, you see the reaction. I mean, year to date is down 56%. And as you said, I mean, from the highs of 2016, it's down almost 92%. It's not looking good at all. But it's very interesting to see that the chairman and other directors resigning, mainly because they're saying they want to comply with the King 4. Very interesting that only today they understand that they need to comply. But anyway, they're doing something to try to revamp and maybe get things to be done differently. But yes, it's not a nice picture given the scandal that is involved, that guys have done things the wrong way. And I think you need a company not to do well because the economic conditions are not okay, not because we've been doing things the wrong way.
How big a company is EOH in terms of South Africa's ecosystem when it comes to the sort of the tech stocks as well?
Very important one. I mean, given that the guys that are running almost over 200 businesses, I mean, the company has been doing very well and aggressively slow. They've been acquiring lots of businesses, and I think it has been run mainly by entrepreneurs. And now having a banker as the CEO probably will try to divide the company into two.
Yeah, if you take a look at that stock, it was trading at around 14 Rand 70 at the top of trade today, and that had fallen around 16% just yesterday alone. So we'll continue to watch that one. It certainly is one of the big fallers across the board. Let's go back now to that budget picture. It doesn't get easier, does it? Every year, particularly probably from around 2012 or so, things have just been very difficult for every finance minister.
By all means, and I hope by all means that it doesn't become an ESCOM issue. ESCOM issues, we all know about them. We just need to know how much are you going to give them, for how long, what are the conditions, and more importantly,
does anything else
where
matter?
The money is coming from.
Does anything else matter?
Yes, I mean, and I think they're creative enough to understand, and sophisticated enough to understand that for us to be able to have good money, you just need to get the economy growing. So it's very important for them to show us that this is what we're going to be doing to make sure that the economy continues to grow so that they can continue to earn the necessary revenue. He indicated, I think in October, that already is taking a shortfall of almost 27 billion. And you cannot make that up by continuing to increase taxes. But you can only make that up to make sure that you include more people into your economy, to make sure that it grows. We all know that the better part of the taxes or the revenue comes from pay as you earn. But if your unemployment is too high, then it means then it's going to go down.
You're certainly not getting it.
We all know that companies pay tax only after making profits. If companies are not making profits, meaning the economy is not growing, it means the revenue will continue to shrink. And we all know, even globally, that small businesses are the ones which are creating jobs. What are you going to do to help them to make sure that at least they're able to create the necessary jobs? I think for me that's the most important thing.
It's very difficult, though, for him to be able to say to you, look, the biggest risk to South Africa's economy is indeed ESCOM and the remainder of the SOE space. But I have to make sure that all the other social needs are taken care of and looked after. Everything from education, which does receive the bulk of proceedings yet from our budget, is going to be a little bit stifled. Surely the likes of health, which is number 2 on the list, is going to get stifled. All other social services. We begin to lose the exact democracy and the exact fight that the ANC had when they came into power in the way this budget looks, won't we?
By all means, those welfare promises are important and they have to be there. We expect to see the grants going up. We expect to see education getting their share. And all I'm saying is things cannot come to a standstill because of the woes that ESCOM is facing. ESCOM, they just have to find a way. I mean, the government can be creative and say, listen, I don't have the money, but at least I can give you money to be able to pay interest for now. So that's an important thing. But by all means, that's well documented. We all know that we need electricity. So that's a given. But the most important thing is what is it you're doing to grow your economy and attract the necessary investments?
They are beginning to walk up towards the steps, and so it's all becoming eagerly awaited. Around 18 minutes or so to go until that budget speech is announced. But very quickly, CPI also coming in 4%, a downward trend there from the 4.5% we saw in December. So January coming up with 4%. Surely it would be a whole lot more good news if we get a cut in interest rates in March.
By all means, and much better than market expectation, and all because of oil prices or the petrol price and the diesel price that we saw going down in January.
You think we'll get a drop in interest rates maybe in March? The last time interest rates were at these levels, 3.84%, was in March 2018. And in that March rates decision, we did get a drop in interest rates. Could history repeat itself?
I'm not sure we'll get it, but all I know is that we deserve a cut.
I certainly agree with you. I think I at least deserve a cut. Makwe Masilela is from Makwe Fund Manager, setting out perhaps proceedings just before the finance minister gets into the room and certainly sheds more light on how South Africa will spend its finances. The walk into Parliament is beginning by all the dignitaries. Finance Minister and his team will, of course, be the last ones to enter, but all the ministers are certainly entering Parliament. We'll have all of that for you live and, of course, on SABC 2 and Channel 404. Do stay tuned to On Point. This is Market Sense.